I think the strongest growth will continue to be international. That's where you see a lot of the carriers, both U.S. as well as international, continue to play to. Last year, particularly Europe, was on fire. I don't think one busy season is going to quench the desire, particularly for Americans, to go over to Europe. So I think Europe will still be a very healthy environment for us.
That was Delta Airlines CEO Ed Bastian on Squawk Box earlier this morning, talking about where he sees the strongest growth ahead. Delta's profit more than doubled, but shares are falling after the company trimmed its earnings forecast. Joining us now is Sheila Kahyaoglu, Jefferies aerospace and defense analyst. She has a buy on Delta with a $55 price target. Sheila, good to see you.
Thank you so much for having me.
Was the guidance that much of a jarring, surprise, or would you expect something like that?
It wasn't as much of a disappointment as we expected. I think the shares are down massively today for two reasons. One, oil's up $3. Mm-hmm. Second, their cost guidance came up, costs up 1 to 3%. Think about each point of price, each point of cost being about $4, 40 cents of EPS. At 10 times earnings, it's $4 to the share price. So that's why you're seeing half the move attributed to that. So revenues came in line. The EPS guidance was modestly disappointing because costs are higher. Wages for pilots are higher. Maintenance expenses a lot higher. So that's why we're seeing that cost pressure that we called out actually prior to this print.
You favored Delta. It seems like you're kind of selective or cautious on the overall industry dynamics for this year.
Airlines are a tough place to be. We favor Delta just given their other businesses. Their Amex remuneration program we think is worth about $40 billion. They have this maintenance business that's $5 billion of revenues, of which $1 billion is external. That's growing given the GTF issues from RTX. We value that at $10 billion. So you're basically getting Delta as for free as an airline. We did upgrade American Airlines yesterday, I believe it was, because we think they're going to be the best in terms of cost, keeping costs constant for 2024. So it's a very anti-consensus call given the ratings there. And similar to Delta, they're not buying a lot of planes, although Delta did have an announcement this morning.
Yeah, that was an interesting call on American. They've had the best cost management, basically, relative to peers in recent quarters?
We think so. It's under-like because leverage is high. Delta's leverage is around 3 times, American's 4 times. They did a big fleet modernization in 2015 to 2020, so they don't have to spend that like United and Southwest does. So that's where we thought the differentiation would be as they delever. They have an analyst day coming up, and shockingly, they have a decent loyalty program. They just don't talk about AA Advantage as much as we hear about SkyMiles, which we said we're valuing at $40 billion.
Well, Bastian of Delta on this morning took pains to say that Boeing will figure out these issues regarding the 9. I think they have some 10s coming eventually, but then we got these Airbus deliveries, which were pretty good, right? I just wonder whether or not you think there's some separate from the FAA issue, Airbus catching up to Boeing.
You know, I think what Ed was talking about was very interesting this morning. He basically said domestic is congested. We're not going to grow domestically, so he really needs to focus on growing international. Domestic is about 65% of his revenues and ASMs. Depending on how you look at it, Atlantic is 20%. So that's really where he's going to put these Airbus A350s that he ordered into the wide-body international market to grow that, as well as into the Pacific. Domestic is pretty much congested. It's really hard to grow. Pricing is less favorable than it is internationally.
Yeah. And so Delta, American, and is it a macro call, just really quickly, on why the airlines are having it so tough this year?
Airlines are tough, yeah. It's we're very pessimistic on the U.S. consumer, okay, but we're already embedding that into our estimates. So it was like, who could control costs the best?
Right. Gotcha. Sheila, good to see you. Thanks.